A recent report warns geopolitical tensions could fracture trade and financial relationships in the Asia Pacific. How could these impact the Philippines? Joining us now from Singapore is Moody's Investor Services Nishad Majmudar. Nishad, thank you so much for joining us on The Final Word. What are these main geopolitical issues weighing on trade, financial ties in the APAC region?
Sure. Well, thank you, Rico, for having me. It's a pleasure. We did just publish a report on what we call geopolitical fault lines. And really, as we know, geopolitical tensions and risks are not new to the Asia-Pacific region. But in our view, as a credit rating agency, we're starting to see these risks potentially have credit effects from a sovereign credit point of view, but also on specific sectors. And we really thought to kind of organize our thoughts around what are these key thematic fault lines. And really, just to quickly summarize, firstly is on the trade and manufacturing front, where we see already in the semiconductor sector that the U.S. and other like-minded countries are starting to restrict access to China for specific technologies. Another fault line that we identify is trade fault lines, in which we increasingly see these various trade blocks forming, including here in APAC, a trade block that is forming really around China, consolidating as the core regional economy for regional trade. And then finally, I would say on the financial front, we do see potential fault lines in terms of international banks or international investors, perhaps selecting where they invest or move money based on the geopolitical leanings of their home governments. And perhaps there may be regulatory pressure bearing on these financial institutions as a result of the broader geopolitical conflict and climate.
Wow, these are quite a number of challenges and issues that the Asia-Pacific region is facing. But of course, the worst fear of all, Nishad, is that if we will be seeing a Ukraine situation here in Asia with China invading Taiwan, these fault lines will definitely turn into quakes.
Indeed, we do see the risk of geopolitical conflict around Taiwan as one of the key elements or key, I would say, symptoms of this broader U.S.-China rivalry. It's not our baseline case, of course, our view that there will be conflict. We do see that the costs would be too high for the global economy, first of all, but certainly for China and Taiwan and the United States, if there were to be a hot conflict. But as we saw during the military exercises last year, we did actually change our outlook on Taiwan's sovereign rating to stable from positive, because in our view, we did see that the heightened military exercises and the surrounding risks around these tensions do somewhat offset the positives that we have seen in Taiwan from a fiscal management perspective and economic growth perspective.
All right, the ongoing U.S.-China issues, Nishad, security alliances, President Marcos maintaining an open foreign policy strategy. Is this affecting trade with the Philippines?
So it's a great question, Rico. In our view, it has not affected trade for the Philippines. And of course, China is the largest export partner for the Philippines. In our view, we actually view the Philippines in the broader ASEAN or Southeast Asia context as potentially benefiting from some of the tensions. Now, of course, Philippines is in a somewhat unique situation having the mutual defense treaty with the U.S. But as you mentioned, President Marcos is trying to balance the security elements and his concerns about the South China Sea with broader economic cooperation with China. And of course, he recently visited China and mentioned a number of deals and investments that potentially may be coming from China. So in that sense, a country like the Philippines, or even a country like Vietnam, for example, which has favorable relations with both countries, both the U.S. and China, may actually benefit from being able to toe this neutral line if it can.
And Nishad, we've seen the president venturing on 8 foreign trips in less than 7 months of his presidency. And he has basically touted close to $50 billion in pledges. These are just pledges. How can the country better attract foreign direct investments?
Sure. It's one of the key questions that we think about when looking at the sovereign rating for the Philippines, which pre-pandemic was certainly on a upward trajectory in terms of the way the government has managed the debt, and obviously economic growth has performed very well. And a lot of that has been driven by investment and infrastructure investment in the domestic economy. I think we look to some of the classic factors that drive FDI things like logistics, things like access to electricity, things like infrastructure, where when we look at the performance of infrastructure investment in the Philippines, it has been ramped up significantly since the Duterte administration. But nevertheless, when we compare it to peers, things like airports, ports, railways, roads, and so on, we do see room for further growth on that front, and we do see that driving further FDI, foreign direct investment, into the country, just given the high growth potential that the Philippines has.
All right, you have a growth of 7.6% for the Philippines in 2022. But of course, that is also being offset, Nishad, with a close to 14 trillion peso debt and a debt service ratio of more than 60%. Given all of these factors, is Moody's Investor Service planning to upgrade the credit rating of the Philippines?
Well, Rico, we do have a stable outlook on our rating, and so that, of course, implies that we view the risks to the rating as balanced. As I mentioned earlier, the Philippines' sovereign credit profile, particularly focusing on the debt profile, was in a fairly strong position after years of fiscal consolidation. And so, obviously, during the pandemic, there was quite a lot of fiscal stimulus, a lot of wide fiscal deficits, but we do have a positive view on the fiscal institutions in the country, the independence of the economic policy making institutions to manage this debt burden down. And of course, as we see with the central bank and its moves in terms of interest rate hikes, we also do see that there is concerns about inflation, and the government also trying to tackle inflation more decisively.
So when is the next review of the Philippines' credit rating, Nishad?
Well, I don't cover the Philippines. You'll have to ask my colleague about that. But as I mentioned, we do have a stable outlook. So for the time being, no plans.
All right. For now, stable outlook for the Philippines. Moody's Investor Service, Nishad Majmudar, joining us from Singapore. Thank you so much for your insights.